Hey team, welcome back to the channel. So in today's video, we're gonna get into talking about bracket orders. I had a few of you reach out to me and ask, how do I set up a bracket order? How do I use it in Thinkorswim? What are the ins and outs? So I came up with 3 things you need to know in order to place a bracket order. I'm gonna give you all of those so you can think about them. And then at the end of the video, I'm gonna give you a 4th bonus tip on a nuance within the bracket orders that'll help make your trades more effective and hopefully result in more profits. So let's jump into it. All right, we're gonna jump into the charts really quickly, but first of all, I just wanted to start things off by just saying, what is a bracket order? Let's ask that question first. So a bracket order is basically a set it and forget it mechanism within Thinkorswim or other platforms like Tastyworks. And what it allows you to do is basically pick an entry point, and then once you're triggered into the trade, it puts out a target and a stop loss for you all at once. So you don't enter a trade and then have to figure out where to place all of your targets and stop losses while the trade is running. It's basically, you get activated, it spreads out all the stuff, and then you can just walk away from your computer because everything's in place for safety on the stop side, and everything's in place for your take profit so that you won't miss out on a big move or a big pop to the upside or to the downside, because you can trade these to the long or short side of the markets. So with that, why don't we jump into the charts? I'm gonna show you an example. I'm gonna show you how to set it up. Then I'm gonna show you how to create a template so you can save them, so you can just reuse them every day instead of having to reset them up every time you wanna activate a bracket order. So let's do that. All right, so what I did was open up my simulated trading paper account within Thinkorswim, and yes, surprisingly, it's actually running today. And what I want to show you real quick is, if you open up this active trader window on the side, so you have your chart, come over here to active trader, punch that, open it up, opens this up, and then what you want to do is you want to go to the template where it says single, and you just want to open that up, and you want to toggle down, and for simplicity, we're just going to do 1 bracket. You can do 2 brackets and 3 brackets. I'll let you experiment with that. You can let me know what you think. If you use them, tell me about your experience. Just comment below in this video, let me know if you experiment with them at all. But up here with TRG with bracket, so I'm going to click that, and you can see right here, if I open this up a little more, it basically tells you you now have a stop loss, you have a limit order, and you're good to go. So what you want to do is pick out your shares. So say you want to go with 200 shares, you enter that in, and then you come to your stop loss. Let's say you want to do a 25-cent stop loss. You put that in there, and then for your limit order, let's say you want to do a 2-to-1 ratio. You can do whatever you want, but let's say you go 50 cents. So now you have a bracket set up for a 25-cent stop loss, a 50-cent take profit with 200 shares. That's all there is to it. That's it. That's a bracket. Now, if you want to save it, click this icon over here. If you could see me, click that. Come in here and just say, let's call this a test bracket. All right, click save. Now that's saved. So say you come into your platform and you open up Active Trader and you say, I want to use my bracket, my test bracket. You just toggle this, go down to test bracket, open that up, bam, there it is. So then when you put this thing on, you just come in here, this really simple way to come into the grid. Say, for example, you want to get long if it breaks the high of 84.02. So this candle right here kind of put in this little high mark. So the high is 84.02. You want to enter at 84.03. So let's come down here. Slide on down to 84.03, which would be right about here. And then what you're going to do is you're just going to click on the green side. That's the long side. If you go to the other side over here to the red side, that's the short side if you want to go short. So if you go over here, 84.03, and click that, it's going to bring up this window. And what you want to do is you can click edit, and you can just look in here, and let me move myself. You can basically come in here and say, okay, what do I have? I've got 200 shares, and here's my order, 84.03, and then the bracket is going to be a 25-cent stop and a 50-cent limit order to the upside. So then all you're going to do is you're going to click confirm and send. It'll confirm it for you. You're going to hit send.
I'll move myself out of the way again. And then what you're going to look at here is, let's close this. So now you can see, and that's unfortunate that it's so, let's do this. I'm going to cancel this. We'll do it one more time so that we can get a better idea. So let's go to our test bracket, and instead of 25 cents, let's do a $1. That way we'll be able to see them better on the platform. And then here, let's do $2. Okay, so we've got 200 shares, $1 stop, $2 take profit, and let's go ahead and put that back out at, let's do it at 84.03 again like we just did. And I'll show you that you can see all of them at the same time. So I'll click this. And if you don't want to go through this step, you can actually just turn on your auto send, and then at 84.03 when you click that, it'll just put it out automatically. But that's a little easier to see now. So you can see that right here is your order to enter at 84.03, and you can see right there it says to open 200 shares at 84.03. Then here's your stop loss. If you hover that, you can see it says $1, and then here's your take profit, $2. So that bracket is set up, and it's not going to do anything until you get hit, until price action hits that level. If this were to push up and hit that green line, it would trigger the order, and then we'd be in. All right, so to review, all you're going to need to know is, number one, you're going to need to know your entry point. Where do you want to get into the trade? Once you have that, you have the beginning of your bracket. You know where you're going to jump in. So you know that you want to pick out at 82.05. That's where you want to enter. As long as you know that, you'll be able to determine what your stop loss and take profit is from that point. So number two, you're going to want to know what is your stop loss. That will determine how much risk you have on the trade, and it'll also determine what this lower portion of your bracket is. And finally, number three is just, what is your target? Where do you want to take your profit? And you can put that out. In this example here, the one we have on was $1 by $2, but the test bracket that we saved was 25 by 50. So wherever you want to take profit, that's the upper end of your target, and that's all you need to know. Now, I'm going to show you one more thing, and this is my bonus number 4 tip for you. And if you come to the test bracket, and let's just put in, let's do our $1 by $2. And the one thing I do want to tell you about these is when you put these orders in, let's say I want to get long at 82.04. So I go ahead and click that. I click edit. Now, the thing you have to be aware of with bracket orders is when you get triggered into this, it is a stop market order. So that means that if you get triggered, that price action has to be right at the penny, or it could drag your order all the way up and trigger you higher. So market order is, it's going to be triggered at that penny at 82.04 like you see. But the market makers can grab that order. If there's a violent run to the upside, they can move it up and drop it somewhere else. So you might not get as good of a fill. So that's where this tip comes into play. I would recommend not using a market order on this type of entry because you don't want to get slippage or get filled at an area that you had no intention of being in. So I would change it to a limit order. But here's the issue with a limit order. If your limit order is at 82.04 and price action hits that level and triggers your order, if price action moves beyond 82.04 before the route happens, because this stuff still takes milliseconds, if the price action is moving violently to the upside or the downside, it could trigger your order and then skip over you, and you actually won't get filled. So what I like to do is I actually like to look at the bid-ask spread, and let's say, like for AMD, it's usually just a couple pennies. So what I'll do is instead of using a limit order, you want to come in here and use a stop limit order. What that means is you can pick when it gets triggered, and you can pick up to what level you're willing to be filled at. So for example, down here, same thing set up, 82.04, that's where I want it triggered. But let's say the spread is 2 to 3 cents, so I want to be sure I get filled, but I don't want to get filled at some unreasonable level. So I'll come down here to the stop limit area, and I'll bump this up, I'll add 5 cents to it. So now what this means is that at 8204, this order will be triggered. Now, as long as the price is between 8204 and 8209, when my order is officially live, I'll get filled. Now remember, those microseconds for it to go out and back to hit that server to say, okay, there is an order ready. If price action's moving quickly, it can always skip you, but giving yourself a 5-cent cushion or window will help you get filled most of the time. I haven't had one skip me since I started using this nickel wide cushion. So keep that in mind. Don't use market orders when you're putting in brackets because you'll get unreasonable fills. Make sure that you don't use just a limit order because you might get skipped. Make sure you go with the stop limit order. And again, just my opinion, it's what I do. Test this in paper trading before you do it, or risk very few dollars on a trade to kind of test it out and get a feel for it yourself before you use it. Just don't go by what I'm saying. Test it out first. But my recommendation is the stop limit order. Give yourself a nickel if you're trading something very liquid. Now, if you're trading something that's 20 or 30 cents wide on the bid and ask, you might want to give yourself a 50-cent window or a 40-cent window. You'll have to kind of feel that out for yourself. But my recommendation for something that's very liquid like AMD, 1, 2, 3 cent bid-ask spreads, a nickel seems to work pretty well for me. So those are bracket orders. If you have questions, comment below. I want to hear from you. If you're new to the channel, please subscribe. We'd love to have you here. And drop down in the description of the video, you'll see a link to a Facebook group. Come over and join us. Click that you want to join and I'll approve you today. Join us. We chat stocks in the morning, afternoon, and after hours, and we're trying to grow that group. I think we're over 100 members now, so come join us there. And if you like this video, give it the thumbs up. It'll really help the YouTube algorithm, and it'll really help get this video out so more eyes can be on it. Thanks for stopping by, and we'll see you next time.